Retailers took a lot of pain in 2022. They identified the issue early, and they marked it all down. Pain point in 2022, but I think it's going to be a benefit in 2023.
Of today's two big prints, which is the better inventory picture?
Oh, Walmart. Walmart's inventories were essentially flat. They're up 25% mid-year. Aggressively marked it down, took the medicine this year. I think that's going to lead to better margins next year.
Does that explain the disparate price action?
I think so, as well as Home Depot is being hurt by trends in the housing market as well. The existing home sales came out today. They missed. Price appreciation is getting squeezed. So I think there is a housing issue there. Walmart's comps were great. And I think it's pretty clear to me, at least, that the guidance appropriately conservative.
Welcome back to the Warlords of Wall Street. The market continued its pullback today. The S&P was down a little bit. Everything was down a little bit. What the S&P, which is what most everybody gauges the market's overall performance by, because it just has so many good companies represented in the index. The market, S&P was up about 8% through January. With the pullback recently, we're closer to 4.5, 4 3/4 now for the year, which still isn't a bad start. But Walmart was one of the first big guys to come out with their earnings today. The numbers weren't bad at all. They were actually pretty good, all things being equal. They did, however, give some very conservative forward guidance, which is not to be expected. I would say that that's the smart thing to do. There's an awful lot that we don't know is going on. We've been covering that every day here, talking about what the Fed's going to do with interest rates, where they're going to start. Everybody, and especially someone who's been around for as long as Walmart's been around and as good at what they do as Walmart is, you have to understand that another 1/4 or 0.5% rise in interest rates may have an impact on your forward earnings. So, because you don't know where they're going, you don't have the greatest idea where you're going, so why not be conservative and hope that you beat the numbers? Because the one thing you don't want to do is come out and miss your numbers. So, Cramer took quite a lot of time to suggest Walmart is the winner because of its great value private label sales.
Walmart, on the other hand, is just completely about getting prices down. So you see their private label doing so well versus their branded that it forces branded to come down and therefore makes it so the consumer feels better off. So I think they're very different companies now, and Doug McMillon has really spearheaded this notion of getting prices down for the country, maybe more effective than, judging what Mr. Bullard said, than anything the Fed's doing.
Well, I would tend to agree with that, and we just spoke of that last week. I guess the guys at CNBC might have been listening. They're behind the curve a little bit, but we discussed the prices that I went out and personally shopped to find that Publix was just probably on a par with Whole Foods for its prices, and that a medium regional player, Ingles, was a better value on the exact same shopping list, and yet Walmart was clearly the winner. And I wasn't shopping for their private label great value. If you factor in their great value line, then they are significantly cheaper, probably beyond 30% lower than the Publixes and the Ingles of the world. So once again, I think you would be wise to spend a couple of minutes online looking at your grocery list and taking a look at what Walmart is selling the very same products for and taking a peek at it. The only issue that I would have, although I love what Walmart is doing, there's not a lot of room for improvement in the stock here. We're probably within 6-7% of the top. And frankly, I wouldn't buy Walmart with my resistance sitting just about 7% above my head right now. That just doesn't make a lot of sense to me, especially over the next 6 months. Although I am a huge fan of equities and rarely trade in fixed incomes, I can't remember the last time I picked up a bond and held it for any length of time. But one would have to be a fool not to look at what the 6 month and what you can pick up for about 1 year, but certainly a 6 month is flirting with 5%. To be able to guarantee yourself 5% and sit out the volatility that's going to come in the next few months, there's an argument to be had there. So something for you to consider. Home Depot had a big miss and also weak forward guidance. This is creating a narrative that the consumer discretionary is in trouble. Then, before the day was out, Kraft and Mondelez both essentially said that price raising might actually be over. The transportation costs, the commodity prices are coming down on the products that they make, and Mondelez especially, because they make 80% of all of their money outside of the United States, was saying that the United States is by far in a healthier situation and that they're seeing much more pressure in Europe and that the economic situation there is much more difficult than it is here. That was good to hear because Mondelez could easily be trusted as a foremost authority given how big they are, the quality of the brand names that they have across their spectrum, and the fact that they are very much weighted to make their money overseas as opposed to the United States. So, in my humble opinion, I think consumer staples are strong, and food is defensive in times like this, and especially the snack makers like Mondelez and what have you, because people always find an extra dollar or two in the budget for their snacks because it's a pleasure thing. And when you're cutting back in a lot of other places, having an Oreo, or if you're going to end up going to Walmart, maybe you go to the great value section right next to the Oreos is their version of an Oreo, and I've had it, and I can tell the difference between it and an Oreo. But considering that the Oreos are twice as expensive, you're still going to treat yourself to a cookie. So, rates crept up all day. Coming back to the government bonds, rates crept up all day. And it's a simple mechanism. When rates are rolling up, the market is going to end up going down a bit because all of a sudden, for the first time in decades, investors have a choice. You can take your chances in the stock market. And right now, over the next few months, that's going to be a bumpy ride. We've talked about this is going to be a bit of a dragon that we have to hold on to. But if you're picking up a 5% bond for the next few months, that's a no-brainer when it comes to, are you putting your money at risk? No, you're not. You're going to get your 5%. Now, after taxes and inflation, it doesn't matter much, but then again, you could end up flat or down in the next 6 months in the stock market if you don't pick what you want to pick perfectly. So I'm going to recommend that everybody take a hard look at that. Last but not least, I've been getting a lot of feedback that people would like to see what our real-time picks are looking like, and if we end up coming out of a position, they would like to have the pre-market alerts on what our position changes might be. And because of that, we had one of our administrators here. We set up a Patreon site, and the link is now below. So if you're interested in following what we're doing, if we continue to demonstrate that we have the ability to make intelligent, profitable investment suggestions for you, and you want to get closer to following us step by step, then may I suggest you look at the Patreon site and sign up, become part of the pride, and join the family, if you will. So, good luck, good trading, and keep your powder dry.